Hello, everyone. Marjorie Roman here, and we have, as always, the king of commercial real estate, Dolf de Roos. Thank you so much
Marjorie,
again.
good to see you here.
Super happy to see you today because we're going to be talking about investors, having fellow investors in our deals. Sometimes it's easy to reach out to our relatives because they already know us and they can probably help us fund a few of these deals. But what if we are looking for external investors that don't know us? How do you go about presenting these deals to them?
Well, the main thing, Marjorie, is when you go to people that you don't know that are not in your sphere of influence, then there are all kinds of financial regulations that you have to conform to. And these vary from country to country. Here in the US, often it's controlled by the SEC, the Securities Exchange Commission. In Singapore, for instance, it's controlled by the MAS, the Monetary Authority of Singapore, and in Australia by ASIC, the Australian Securities and Investment Commission. So you just have to be aware of them, and they all have rules, but they center around the same thing. If you know someone and you've been in business with them before or they're a relative, then you're allowed to present them information and see if they want to participate in a deal with you as a joint venture partner. But if they're people that you don't know, there are very strict rules that you have to conform to. So usually you'll have to come up with some kind of document. Often it has to be registered with the financial authorities. It might be a PPM or an offering memorandum. So I think the best thing to do, whichever jurisdiction you're in, is to consult someone who understands these things. It might be a financial broker or an attorney who specializes in investing, just to make sure that you're not skirting a rule that could get you into trouble. Very often there's a requirement that you can only approach what's called accredited investors.
Oh.
And that's a very fancy word for an investor who meets certain conditions, like they have to have a certain net worth and a certain income.
Oh, wow.
I'm reluctant to say what those levels are because they change over time, but it might be something like they have to have $100,000 of income and a net worth of $500,000.
Oh, wow.
I won't mention which jurisdiction in case I get the particular one wrong. So an accredited investor can participate in these deals where theoretically someone who's not accredited cannot. If you have a group, it might be an investment group, and people have been part of your group for 3 years and you've met every week, then you know them. You've got a contact with them. And then there is a different set of rules that applies to those people compared to people that you don't know. You just met them last week for the first time. Okay. So the main thing is to, make sure you conform to these rules. But once you've gotten over that hurdle, what do you present to them to make a compelling case that this is a good investment? And I would say the most important thing is simply to tell it as it is, or to put it another way, be honest, have integrity, tell the truth. Because if they don't want to invest in the deal, if you're truthful about it, then it's probably not a deal that anyone, including you yourself, should be investing in. So a deal has to stand on its own 2 feet, and it's got to be extraordinarily compelling for any investor to get involved in without you embellishing any aspect of it.
That's right. And I feel like at the same time, when you are bringing all of those other investors, and if you feel like you're embellishing this deal way too much for them, that also gives you an idea that probably you should stop looking at that one deal. Just by looking at their experience and their expertise, their many years of having done deals, tells you if the deal that you got on your hands is a good one or a bad one. Now, you did mention something called the Offering Memorandum. What are some of the things that are included there in this memorandum?
Well, the more information, the better, and where it is, where it's located, if it's currently got tenants in it, what the rent roll is, what the generated income is, the gross revenue, then what all the anticipated expenses are. Some are easy to look up, like property taxes would be easy to look up. Insurance, you cannot look up publicly as easily, but you can generally get a good idea whether insurances are on the mark or not. Then there are all kinds of expenses that you'd expect. The electric bill, is it recovered from the tenant or not? Is it a triple net lease or is it a so-called gross modified lease? But then you've also got other more unexpected expenses, like has there been a sinking fund for any major repair work? Oh, wow. Because if the roof collapses or leaks in 100 places and it doesn't warrant repairing the roof, what's it going to cost to replace it? And if that's a $200,000 job and your rent roll is only $80,000, can you withstand having 2.5 years of rent taken out of your cash flow? So right. The more you can account for, the better off you are. And then, of course, delineate what it is that you're offering. You're offering an X% shareholding in this project in return for $300,000 of cash or whatever the numbers are.
And I feel like at that point, it's kind of like giving these other investors an overview, a more visual overview of how the numbers are going to be performing in the future based on the deal that you've got. Now, when it comes to the experience side of things, like you as an investor, if you were to reach out to other external investors, what are some ways that you can show your experience and that you are a trustworthy person to them besides this offering memorandum?
Well, again, tell it as it is. So just show and share some of the deals you've done or give an example. The more you end up doing, the more credibility you'll end up having because you've got a longer track record. And also, not everything works out. Real estate is a numbers game. So if you've done 10 deals and one of them hasn't worked out particularly well or the way you wanted it to, don't be bashful about revealing that one because invariably you can show how you learned a lot from that deal. I learn more from my mistakes than from my successes.
That's right.
You hope you have more successes than mistakes. You don't want to have more learning than financial pleasure. But, don't be shy of revealing what you've learned from either.
That's right. And I feel like at that point, you're becoming more like a trustworthy person on their eyes because they're like, wow, this person truly revealed to me not only the good side of their investments, but also the bad one.
Right.
And what they learned from that. That's the most important thing, I feel like. Because it's so easy to say, oh, yeah, I just made this many mistakes, but not saying what you learned from them, that's a really big no-no. Now, what are some of the red flags that you would think, and that you would say for an investor, a beginner investor, that they shouldn't do when they are reaching out to other external investors for funding?
Well, the main one, again, is to make sure you are not in contravention of any of the rules and regulations. So don't go out to the public or don't run a public event where you've got people who've turned up for the first time and say, hey, I'm seeking $10 million tonight and put the money in and then we'll go into the sunset together on this deal. Because there may be no one there from the regulatory authorities and there may well be. And even if there are not, you don't want to flout the rules and hope you don't get caught. You just don't want to, it's so easy to make money right now in most Western nations by conforming to the rules. And you may not like the rules. I don't like a rule that in some places you can still smoke cigarettes outside because it means that, if it's nice weather and you want to sit outside, but you're surrounded by smokers, and then to avoid the smoke, you have to go inside. It's punishing the non-smokers and condemning them to sitting inside. But I accept that smoking is still allowed in places, but then I'm old enough to remember a time when smoking on airplanes was normal. When you got your ticket or checked in and got your boarding pass, you had to specify smoking or non-smoking. Oh, wow. And the smokers got to sit up front. And those who were indignant and pathetic enough to not want to smoke were confined to the back of the airplane as if there was no smoke there. The smoke still gets circulated around. So my point is, and some people might still want to smoke, of course, but I guess there are those that do, but there will always be rules that you don't like. And you can't change them. You can make it your life's mission to change the rules. So smoking outside of restaurants, you want that banned, so you become a lobbyist and work for that for 20 years. I'd rather not be too bothered about it. And the odd restaurant that's still like that, I'd probably avoid them. But focus on the things you enjoy doing. So, you can't flout certain rules and you can't solicit funds from strangers, basically.
That's right. And I feel like it also comes down to one of the lessons that you taught me, that is, do not ask people for money. Because I feel like not everyone's going to be like, oh, yeah, here's my money, I'm just going to give it to you. That's a terrible way to do that. Because the way that you approach it is by asking people to participate with you in a wonderful deal that you end up finding, instead of asking them to give you the money to end up getting that deal.
Right. I'd even go one step further. And I don't ask them to participate in a deal. I offer them the opportunity. So I'm doing this, and it's not as if without your money I'll never do it, and with your money I can. No, I'm going to do this deal. I don't have all the capital I need to do it myself, so I'm offering it to participants who want to join me, joint venture partners. And if you want to join me, great. And if not, that's okay too, because out in the world, in the 7.5 billion people, there will be quite a few who'd love to be in on this project with me. So it's just a matter of finding a good match.
That's right. For every no that you get, you probably have like 1,000 yeses saying yes to you on the deal. Right. Now, when it comes to investing with external investors, have you done it yourself on a few of the deals that you have?
How do you mean external investors?
Such as like bringing in some partners into your deals. Have you done that?
Oh, yes, absolutely. But you have to have all the documentation in place. And
Can you tell us about one of those deals that you did with a partner?
Yes.
The generals, of course.
It can take 9 months to get all the documentation in place. In fact, we had it once where it took so long to get all the documentation approved that by the time we got the final bits approved, we'd exceeded the time limit for the first submission, and we had to submit it all over again.
Oh, wow.
And I know. And, also when you have a public company, then suddenly there are a lot more people who can legally review what you're doing, which is nothing wrong with that. It just takes a lot of time and effort. And, when you produce monthly reports, you end up feeling as though I hardly have any time to actually run the business because I'm running reports on what I just did. And, I've got one commercial loan with a particular bank, and they want 6 monthly reports from me. I said, but nothing changes. The leases are all 5 or 6 or 7 year leases. And every 6 months they want a personal financial statement and a rent roll and any changes to it. And you name it, bank statements and a balance sheet and a profit and loss statement.
That is
and
a lot of reports.
That's a lot of effort. And that's just every 6 months. So when you get to a public company stage and you have to do it monthly, it feels as though a lot of the resources that you'd like to deploy to generate revenue for the company are deployed accounting for the revenue you didn't generate last month because you're busy doing all this accounting stuff. So it can get frustrating, and that's why, not everyone who's run a public company is very quick to do it again because of all the financial obligations of reporting.
How did you deal with all of those frustrations and all the reporting?
Just more staff. But then you end up with, way too many staff for the size of the operation. Gotcha. And they're all required. That's the challenge.
Gotcha. Well, but if anything, it does give us an idea of how how much effort and time we're going to be requiring for having a public business, in this case, for our investing deals. Now, when it comes to partnering, would you recommend a beginner to go ahead and start looking for partners for their next deal?
I think find the next deal first, because if you find a partner, what are you going to say to them? I don't have a deal yet, but if you commit $1 million to a deal that I haven't identified yet, then I'll see if I can find a great deal. No one's going to commit money to an unknown deal. So I think the sequence absolutely has to be find a great deal. And when I say great deal, I don't mean slightly better than mediocre. I mean a great deal. Because the better the deal, the more people will come to you and say, how can I get involved in that? So the trick is always to find a great deal. And if it's great enough, Marjorie, you may not even need an outside investor. To go back to our example, if you find a vacant building and you figure out a way of getting a tenant in there at $100,000 a year and cap rates of 5%, then that building's worth $2 million. And if you get a 50% loan, then the bank will lend you $1 million on it.
Which is the total price.
So you only need to buy it for less than $1 million, and you can put money in your pocket by buying it, in which case you don't need an investor.
That's right.
The world's not always that simplistic or easy. So in general, you won't always find a deal quite that good. And that's okay. And you might need an investor, but find the deal first. See what you can do on your own, and then say, you know what, I'm only short $400,000, and I don't need to offer that much equity to get someone to put the $400,000 in.
Right, because at that point, you're trying to fund as much as you can on the deal by being creative, instead of just waiting on another partner to just end up giving you all the money for the deal.
Right.
Perfect.
Right.
Thank you so much again for your insights.
You're so welcome.
And thank you to our audience. So there you have it. Find your amazing deals, and you will see how the partnerships will come afterwards. We're going to see you in the next episode.